All right. So we're gonna give it about 1 more minute, y'all. I'm on IG Live too. What's up, Dominic? What's up, bro? We doing our Sunday ritual live meeting. So typically on Sundays, we like to just start off covering the market, seeing where we at, looking at any news we got, any upcoming data, anything we got to look forward to for the week. We want to check QQQ and SPY. We want to see where the market at, and then we do some Q&A. We kind of just go from there. If y'all tapping in on IG Live, y'all gonna see how we get down and how I really get to it, man. All right, so we're gonna go ahead and start. Huh? My fault, Brody. I got some motherfucking apple and peanut butter. I'm smacking loud as hell. My fault. The apple and peanut butter go crazy. All right, y'all. So look, this is what we got. And if you on this live, pay attention because you want to know what's coming this week. All right, we got a lot going on in the market. So, first things first, we like to check. All right, what do we have upcoming? All right, because we never want to, just get caught by the side eye and kind of, just get caught into something, right? So it looks like Monday, Empire State Manufacturing. That's nothing too crazy. Let me wipe my camera off. Tuesday we got U.S. retail sales. At 8:30, and then we also got retail sales. Okay, that's the same thing. We got import price index. So that's probably going to do something with the tariffs and stuff. We got, okay, that's pretty much, I think, for Tuesday. Wednesday, we got nothing too crazy. Oh, we got FOMC interest rate decision. Oh, my God. All right, y'all. So, all right. So, let me write this down, okay? No trades. We not placing whatever we in, y'all, right? Me personally, you can do what you want, but me personally, I will not be placing any play until what? After Wednesday. Why? Because this is very important. On Wednesday, June 18th, this Fed rate decision right here, the market is going to react whether he cut, the market's going to pop, whether he doesn't, whatever the case, right? But we know that we're gambling at that point. If I put in a play and say, hey y'all, I put in this play, knowing how we trade, that would be considered gambling when this right here can move the market either way. You feel me? So, if y'all want to day trade, whatever the case you want to do, all right, cool. But do not place a swing, and absolutely do not get into a trade before 2:00. Feel me? So, because you don't want to get in a trade at 1:30, and then let's just say the trade didn't go your way by 2:00. Now you in a trade when Jerome Powell is speaking, and you know how that can go, right? So I'm about to write that down. Wednesday. And then 2 through 2:30, y'all, we want to be watching the market. All right. So whatever we doing, you can go on CNBC, TV, on YouTube. You can go on plenty different channels, but you want to make sure we paying attention to this FOMC interest rate decision right here. This is gonna be crazy, and then what he say as well. All right. So wow, that's so. This is why we look at this stuff. Do y'all see that? Because just imagine, right? If we didn't check and see what was about to go on for the week, we would have just been like blind. We would never knew that. Oh snap! FOMC interest rate decision and Jerome Powell was speaking. You feel me? So this is why we do this every Sunday. Okay. Thursday, nothing too crazy, and then Friday, nothing too crazy. All right, but this is a crazy week. We got retail sales, we got import price index, and then Wednesday we got Powell and FOMC interest rate decision. So it's a lot going on. We don't even need to check the FederalReserve.com. I will just in case, just to make sure. We go right here to calendar. That's what we checking out right now, my boy. Yep. So Wednesday is gonna be crazy, y'all. So me personally, bro, I'll really sit on my hands and get a specific direction that the market is gonna go and wait and see like what's gonna happen before I place another play. Now, that don't mean like get out the plays that we in. No, we not gonna play scary. You feel me? So we go stay with we in, the two plays we in, but it's just we want to wait till after. All right, so that way we don't get caught off guard. Okay. Now just look at the news real quick. Let's just see, because it's a lot going on in the market. So let's just see what we got. The top news. I'm really looking for anything as far as like the wars and stuff. I'm looking for like Iran stuff because I know that stuff tanked the market last week. So like I'm trying to see what they talking about with that. And just go right here, go to stock market. And at any point, if y'all got any questions or anything, just let me know. Okay, so oil rises. I noticed that on Friday too. Oil ran up. So companies like Chevron, BP, Exxon Mobil, those type of stocks, right? And then also what? So when war happens in the market, right? When there's turbulence going on like that, what other stocks go crazy? TRX, Boeing, all those type of like military stocks, right? Palantir, you seen Palantir do a little something. So that's the type of stuff we want to look for. Pretty much it's uncertainty, and I do want to speak about something with y'all too. Because notice how, right? And we'll pull up the charts in a minute. I just want to see US stock futures. Yeah, this is stuff we already know. Nothing too crazy right now. All right, cool. Enough of that. But I want to show y'all, right? Make sure. All right. So I want to show y'all, right? Notice how every time we get to all-time highs, it's always some BS that come in the world, right? Y'all notice that? Like, notice how, right? Why does it start happening when SPY is what? Was at this point was only 1% away from making a new all-time high. So SPY, the whole market in general, right, was only 1% away from making a new all-time high. And then guess what? What happened? Iran started shooting missiles at Israel. Right now we got extra uncertainty than what we already had in the market. Feel me? Right here. What does Trump come out and say? Tariff this, tariff that. Right? So it's like, I'm not saying that, they're going to war on purpose just to make the market fall. That's not what I'm saying. But I'm just saying it's just like, it just seems like, every time it's always a coincidence that we are all time high every time some BS go on in the world, and they could be playing on us. We never know. All we can do is just try to navigate through all this stuff. All right. So before we move on, y'all, any questions? Before I move on, any questions, anything? And I appreciate everybody who tapped in tonight. Just let me know real quick. Y'all can turn on the mic and say it, or y'all could just type it in. Just want to make sure we all on the same page. All right, so nothing about anything we just went over. We all good? We can continue? All right. All right, we all good then. So let's look at, we want to look at SPY and QQQ, right? And the Dow. So this is what we said last time, right? So what we said last time was we had our levels, right? Didn't I tell y'all? I told y'all watch SPY 600. You feel me? Now we did go above. This thing went to 606, right? So it went to 606, but guess what? We got faked out, y'all. Right? Because if we look on the weekly time frame, look at that. So buyers stepped in, buyers came in, but then what? Sellers came in and pushed it down below. So it closed below that key 600 level on the weekly time frame, right? So this is a rejection candle, a bad rejection candle. Okay. So what we're looking for, honestly, bro, on SPY this week, this is crazy because it's gonna be tough, y'all, because you got to think about it. We got the wars, you got the tariffs, and then you got interest rate decision. So think of all them three things. It's all uncertainty. So if I'm being honest, I'm glad we got in our, we are hedging right here. If you remember what I called out, just in case, right? The market does decide to do something weird, and at least, we wouldn't be eating off of it as if the market would go up, but at least we'd still be getting something out of it. And then we could just, we can just get inputs on the back end if it if it starts to come down like this, how I did before, right here, but I also say that the fact that now we're heading into the summer, if y'all remember what I put in the group, remember everything I sent in the group when I was like, hey y'all, we approaching the summer. July, August, and September are typically bad months in the market, right? The market typically likes to fall back in the summer during them 3 months, right? Due to history. So given all of this stuff that's going on in the economy in confluence with July, September, and August being the worst months in the market, I wouldn't be surprised if we see this right here, y'all. I'm gonna just be honest. And don't get me wrong, I'm fully optimistic about the market, but I wouldn't be surprised if, that happened right there. You feel me? And then to get bought back up later. But I honestly say it really depends on. I mean, this week is going to be crucial because we've all investors, everybody has been looking forward to what Powell was gonna say in June. So depending on what he says, this could be, and then rejection off of this key level 600, we could see a really bad move down. Honestly, So I think that's where we at right now. I mean, we still look good, we still look cool, but I think I would say let's try to get a break and hold above 600 on a at least maybe on a daily time frame again or on a weekly to confirm upside. And then see what Powell say. But I think definitely we need to have some patience just because it's a lot going on. So, but if you see right here, right? You see I got my arrows right here, right? So look, 1, 2 rejection, 3 rejection, 4 rejection, 5 rejection. So this, I want y'all to know that this right here, if we fall from here, just know, y'all, it isn't a coincidence. All right. So I want us to keep that in mind that nothing in the market happens, just because. You feel me? So if we do, just know the market falling from this general area wasn't a coincidence. Okay. But like I said, we definitely want to be looking forward to what Powell says, and then we kind of just go from there and navigate through there. All right. So that's SPY. Really, honestly, the same thing going to be on QQQ, but except we have a level of my main key level that I had was 530. That psychological level, 530, right? Because if we go to the weekly, look what it did. You see, it got the same weekly candle that's on SPY. So look at this. This is QQQ. Look, buyers came in and then sellers took over, pushed below and closed below 530. But if we go to SPY, it's the same candlestick. It's just a different key level, right? On a weekly time frame. Look at that. It's the same thing. So y'all see that, right? So like I said, remember, SPY and QQQ moves in correlations, right? To each other. Okay. So we have this 530 level, right? So it's either going to be this break and hold above here, and then boom, we make new all-time highs, or it's either going to be Powell comes out, says something stupid that the market doesn't like, and then hey, we down here, right? So all we could do is wait, and pretty much see. Okay. And then the Dow, right? The Dow Jones. Let me make sure I'm not missing any questions. All right, we good. So the Dow Jones, if you go to DIA, or you could go to DJI, you can go to DJI, right? Or you can go to DIA, the ETF of the Dow Jones. Either one doesn't matter. They're both going to be the same chart. But, right, if you look at the Dow from all-time highs right now, the Dow is down 6.5% from highs. Okay. So we're looking at here. I'm looking at on the Dow. I'm gonna be honest, y'all. I see this major key level right here. I appreciate everybody tapping in on IG Live too. So this key level right here, right? Why is this a key level, y'all? Because remember, when we talked about market structure, this was the last point at which the market popped from. It broke, came up, retested the same general 415 area, right? And then popped up to the upside. So you'll be able to see it better. This is why we like our zones, because if I do this here, boom, now you can see it easier. Now you can see it. Now it's not just a specific key level. Now it's a zone. You feel me? So what are we looking for, right? If we was looking at this, and it's on the weekly time frame, let's go to the daily real quick, right? What do we see here? All right, I see potential of the Dow. If everything goes, somewhat okay, we could come back down to this general area like we retested the first time, and then start to pop up to the upside. Now, worst case scenario, like we said, if everything goes wrong in the market on Wednesday or whatever the case, right? What we'll see is a break and hold below, and then boom, we gonna fall to shit from that level. If we being honest, right? So do y'all see that? Now, another scenario that could play out is going to be this here. If everything goes instantly okay with the market this week, we go straight up and we blow through these recent highs, this recent peak that we made right here, right before we started to fall down, right? And we'll see this. So from here, we'll see, boom, maybe some chop, maybe a break and retest, and then like that. All right. So that's what I'm looking at on the market, technically and fundamentally, that we got upcoming, this week and the rest of this month. All right, so those are my levels for our big indexes. Okay, so does anybody in the group have any questions about that before we move on? We all good? Do all that stuff make sense? Even if you're a beginner, don't trip about like, certain things you may not understand. If y'all didn't finish the course yet, that's okay. Like if you just super brand new right now, that's all right. I feel like even though like you'll still be able to kind of get a sense of, what I was talking about there. But and then like as you go through the course, it all makes sense. So like is we all good? Decent for now? Y'all can type it in the chat or just turn the just let me know through the phone. Anybody? Just let me know real quick. All right, cool. Thank you, Andre. I appreciate you. All right. Um. So, um, thing acting a little slow. All right. What was it that I wanted to go over? Okay. Actually, let's just do some. We could just do some Q&As right now. Honestly, I think we good. We good enough. So let's just do. I'm gonna just go down the line. All right, and then we'll go from there. Okay. So, Andrea, what's up? I'm doing good. How you doing? Good to hear from you. Typically it does. It does kind of get the market a little pullback. I think that's when a lot of options go on sale and people start selling their options or whatever that expire and stuff. So typically we do get a little dip. But I think the real big, we wouldn't get nothing super crazy. Like it's not gonna be like if Trump came out and said 200% on tariff type of dip. But I think it could definitely, depending on what's going on in the market, it'll definitely, especially like individual stocks. I don't think more so like the full like that like SPY, but I think individual stocks would definitely go on the dip. Hmm. Yeah, yeah. I know you ate off that. I seen Palantir. I seen that. That was a good hold for you. Like that was good. Um, yeah. Me personally, so like let's look at Palantir real quick. Because I've been looking for I ate off Palantir so many times, y'all. I can't even I forgot how much money I done made off Palantir, to be honest, bro. Like it's just crazy. But Palantir, so if we look, right, what's our number one thing that we said when it comes to our swings, right? Or our leaps? We never put in a play at 52-week highs, right? Why? Because it's liable to pull back at 52-week highs. You feel me? So if Palantir is right here and I get in calls here, long dated calls, what am I doing, y'all? That's considered chasing. That's considered chasing, right? Not waiting for the stock to pull back, exhaust a little bit, or sell off a little bit, and then get in on the pullback. But if you get in right here, you literally just asking to lose money. Like if you get in a call option here, a long dated call option here, you literally like it's telling the market, hey, take my money, please. I want you to take my money. You feel me? Because don't get me wrong, right? Can Palantir keep soaring up from here? Yes, but we know as long as this thing is going to keep being at this 52-week high, it has to exhaust at some point. It has to pull back at some point, right? Why do you think the S&P does that every time, right? So when something keeps running up, even when it was right here, I was skeptical about getting in because it's like, I'm like, all right, this is all-time highs right here, and it chopped a little bit, and then we got this little pop here. But even this chop was a good play, so I could see why. This was pretty okay considering everything. It was still really risky though, because it's literally at all-time highs. But I would rather, for example, like if Palantir can come here, boom, back to about the 120 range or 112 range, and then we get that nice pop up to the upside. My drawing is crazy. um, but like far as Palantir, that's what I would be looking for. I would be looking for a nice pullback. Let's just even say percentage wise, right? Because I like to use percentages a lot too. So because that's how institutional investors think. So if we just say, all right, cool, all time highs is right here, Palantir, let's try to get us at least before we start getting in, average in about 10 to 15%. Before let's let Palantir pull back at least 10 to 15% before we try to enter again. That makes sense. So that way we not, you know, getting blindsided and just getting caught up in something. Once investors choose to take profit. That makes sense. Okay. All right. Cool. My boy, Darnell, what's up, bro? I think you the youngest person in the group, bro. Like I'm proud of you, dog. Um, I really appreciate you, like, just taking your goals and your investing serious, bro. Like, you don't understand how like the decision that you making right now is so like life changing, and you making a really good decision at 18, bro. Cause I just, no, you good, bro. You good? Cause we gonna go down the line. We got some other beginners in here too. Yeah, you good? Just try to keep them to like at least like three questions. Hmm. Right. Okay. All right. Cool. So he said, "Why?" All right. So with the options chain, right? Um, with the options chain, you this is why they have different prices, bro. So if I had to put it like this, right? So what part before I do, right? What part are you on in the course? Okay. All right. Okay. So did you see the part where I was like intro to options chain at all? Okay. Okay. All right. So for example, right? Um, my fault. With the options chain, so with one options contract, that equals 100 shares. Remember, I put that in there. Okay. Cool. So we know, right? If it says um if it says 1.1.00, you have to times it by 100, which is going to be $100. So on the options chain, yeah, don't get me wrong, it is technically $1, but you have to times it by $100. Feel me? So that's just the basics there. Um, so when I say, hey y'all, I'm getting when you see my contract and it may say 25.30, that's not 25 dollars. That's 2,500. That's $2,530. You feel me? So that's the basics right there with that. Now, the pricing depends on a few things, right? The biggest thing is going to be the expiration date. So if you look on the options chain, right, and you notice, um, damn, let me pull up my Robinhood, y'all, real quick. Let me, so you can kind of get a visual. So you can kind of get a visual of it. All right. I'm about to pull up my Robinhood real quick. Robinhood. Log in real quick. All right. All right, hold on. So, right here, right? All right, cool. So, we right here on the options chain. So, let me share my screen again real quick. Damn, fireworks going crazy. All right, so we on you see the see everything? All right. So, what this is telling me, right? Right here on the side, and it's gonna look different on your phone. So it look different on your phone. But this is just just because I'm on the what's the name right now, right? But now the shorter the expiration date is to the of the strike price, um, the contracts are gonna be cheaper. Why? Because basically you have a lower probability of this stock of the actual stock price hitting your strike price. And then the further you go out, so the further your expiration date is, um, your contract is going to be a bit more expensive because now you have a higher probability of your strike price of your stock hitting your strike price. So do that make sense? Now, the reason why, like, I can't tell you specifically, like, why specifically. For example, this contract here on SPY is this 604 strike is specifically 54 cent. Like, I can't tell you specifically like why it's 54 cent, but I can tell you why it's this cheap. The reason why it's this cheap, why it's only 54, not 54 cent, $54, is because it's basically saying the chances of SPY hitting 604 in expiration by tomorrow is low as hell. Do that make sense? That's why this contract is only $54 because the chances of SPY hitting 604 by tomorrow, because this is a call, is very, 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 very low, right? So the biggest thing is not to really worry about like why it's a specific price. Our biggest thing we worry about is if like how high is it or how low is it? Do that make sense? Like how expensive is it or versus like how like cheap is it? Because that's going to tell us whether the contracts make sense. You feel what I'm saying? Be- because do you get where I'm coming from? Okay. So that kind of explain. No. No. So you will have to go. So you will know good contracts once you fuck it. We just gonna go over it real quick. Fuck it. So, but this is in the course, bro. I want you to go over this too, okay? But for example, right, just to keep it real brief, you know good contracts based off of your expiration date, how close it is to the strike price, how close the stock is to the strike price, and then based off the open interest in the volume. Now the open interest, right, right, yeah. So that was me explaining that. So that's how you know. So tied in, right, with what we just said, where it's like, okay, tied in with everything, with the volume, the open interest, all of that stuff, plus, right, the how basically how expensive it is, or like how far it is away from the strike price. That's how you know good contracts. All right, cool. You got any other question? Was that like the main one? Oh, okay. All right, cool. All right, my boy Mike said he chilling tonight for sure, bro. Tyree, what's up, bro? Appreciate you tapping in, man. You go ahead and type in the just type in the chat. Or you can just say something on the phone real quick. I'm not sure what my boy doing. Cam, what's up, bro? So Cam is experienced trader. He been trading for a minute. Oh, you good, bro? You have cause you said you was gonna wait to say your question at the end, but we just going through the line right now. So, like, do you still got anything? Oh, you can go ahead and type it if you got something like just simple, like you want to type or anything, or just like just say your question, bro, and then just hit me up in the direct messages in the group if you want to, bro. My boy Brandon, what's up, bro? And Tyree, if you got any any question, anything you want me to go over, anything like that, just type it in, or you could just let me know through the microphone, bro. And so I also want y'all to let me know. Um, well, just keep in mind, right? So everything that he said, when you signal and things like that, you want people to take profit when they are comfortable, or how does that work? Yeah. So what I do is, bro, I always when I call out a play, I always say what percentage I'm up, because we going in with different size, right? So my 6% or my 10% may be different than somebody else 10%. So if I go in, for example, if I go in 5K, my 10% is $500. But if you go in 500, your 10% is what? Like, I think $50, right? But as a beginner, that's still good. That's really good money, right? Now, the reason why I'll say, like, okay, if I get into a play, right, and I say I be sure to let y'all know, hey, I'm up 6%. I always give y'all the option to either take profit or hold with me. I'll let you know, hey, I'm up 6%. Go ahead and take profit if you need it. I'm going to continue to hold, right? Now, what I recommend is, if you're a beginner and we get in plays and you get up 6 to 10%, you know, um, at a quick time span, within that same week or whatever the case, just go ahead and take your profit, bro. Just go ahead and get used to just taking, a win from the market. Don't even like trip on the money. You feel what I'm saying? If you go in with, I don't want you to go in with the mindset like, oh, damn, it's only $50, or damn, it's only $80. You feel what I'm saying? If you was like so beginner, bro, you gotta be, this is how I build. You feel what I'm saying? This is how I scaled up. We gotta get used to just, in the first place, like, taking wins. A lot of people don't even know what it really feel like to consistently win trades. You feel me? So that's what I'll do. I'll let y'all know, hey, I'm up 10%. If you want to take profit, go ahead, but I'm still holding, right? I'll let you know, hey, I'm up 8%, 10%, whatever the case. I'll all let you know, give you the option to take profit if you want, but hey, I'm still holding. Now, the moment I say I sell, you can either sell with me, or if you want, you can hold. I'll let you know if it has more room if I feel like it has more room to run, right? Because a lot of times when I get out of stuff, it'll continue running and then it'll pull back. It don't pull back all the time immediately, but every time is different. But what I would recommend is that right there. So I would recommend, if you're a sole beginner, you don't really have any profits yet. If I say, hey, I'm up 6 to 15% or whatever the case, go ahead and TP. I want you to go ahead and TP, right? Take profit. If you got a little bit of experience, you got, you kind of just got just a bit more experience, and I say, hey, I'm still holding, you know, you just got that strength to continue to hold with me, go ahead and hold with me, and then just sell when I sell. You feel me? Now, if you like, man, Chris, I really like the way this play is going. I really like what I see here, right? With everything that you learned in the course or your experience, whatever the case, right? If you want to continue to hold after I sell, you can do that. So that's just that's my how I go about it, bro. But I make sure I communicate with y'all. So always be looking in the games because that's where I'll let y'all know, hey, I'm down 8%. Y'all can add here, or this would be a good entry price, or hey, I'm still holding, don't panic. Whatever the case, I'm always communicating with y'all. So do that make sense, bro? And then he said, for supply and demand zones, what's a rule of thumb to not make them either big or small? All right, cool. So he said with your supply and demand zones, because you don't want to be making your supply and demand zones just overly big zones or overly like too small of a zone where you can't really see nothing, right? So what I'll say, bro, is the biggest thing is it really depends on what time frame you on, right? This is what I mean by, and let me make sure my screen is sharing real quick. So what do I mean by it depends on what time frame you're on, right? So let's just say, right, if we go with a stock, I don't know, a stock I never charted before, JBT or I think BJ's. I don't know. I just need to go to something real quick, right? So if you go on the monthly time frame, right, and you say, all right, cool, JB, what's up, bro? If you say, all right, cool, this is a supply zone. Well, it looks like a zone, right? Because it was all time high at one point. It kept getting rejected, right? It kept, it came up here, came right here, and then boom, it sold off, and now it's continuing to sell off from this all time highs here, right? And then let's just say you draw a zone here, you draw this here, we call it supply, right? This look like a small zone, doesn't it? We on a monthly time frame. Don't that zone look small? But guess what? If you go to the daily time frame, or actually that's not even that bad, honestly, for a daily. If you go to the 30-minute time frame, it's probably gonna be crazy. Yeah, that's way too big of a supply zone. That's because it's no precise area. So like for example, if you was on a 30-minute, your supply zone would be like this instead of that. Does that make sense? Now, the biggest thing, bro, is where you start from drawing your supply zone, or demand zone. So you always want to draw it from the last dramatic move, either to the up or the downside, right? So if we go to the weekly time frame, all right. Damn, this don't really have no drastic moves. Let me see. Yeah, right here. Okay. So y'all see this steep move to the downside right here? Look how like crazy this is week after week. How like dramatic this downside move was, right? So this is where you would start to draw your what supply zone. But what I would do basically is draw it from the candlestick wick that started it to like depending on how many candlesticks are after it, but you kind of just want to draw it to the body of another candlestick. But like this right here, for example, on a weekly time frame, this would be too small of a zone. Y'all see that? So this would be too small. Even though I drew it to the body of this candlestick, the close of this green candlestick, that's too small of a zone there. So I will have to stretch this out to about at least like about right here to the body of this candlestick, to the open of this candlestick. And that way, when we stretch it out just like that, it goes across our screen. All right, cool. We can see like how it's just basically hitting off the zone here. Right? So reject, 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 and then finally bounce back up to the upside. But you would never draw your zone like that. Like that's too, because you can't make you can't see precise like price action. You feel me? Like this too much of a wide range if you try to, you know. So it's like you kind of want to keep it depending on what time frame you on. I just like to. I don't really. I just don't do them like overly drastic. All right, I like to make them make sense. So this is a good zone here. This is actually a perfect zone. Goodness, look at that. That's crazy. Cause we can see right here, and my computer acting a little slow right now. Reject, 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 and then break and retest that supply turn demand back up to the upside. All right. So do that make sense, bro? We got a lot of videos on supply and demand. So go ahead and check those out in the video recording section. And then the videos in the course and everything. Tyree, did you have a question, bro, or anything? Where you at with the course? And did you because I know you was on Robinhood. Did you start like investing and everything yet? Are you ready to do options yet? Like where you at right now, bro? And then after this, for the last 2 minutes, I want to speak on something, y'all, for us like building our long-term portfolios and stuff. All right. I don't know what. All right, cool. So when y'all buying shares, okay, you want to make sure, right, that you're not at the beginning stage of diversifying too much. Okay. So what do I mean by that? So what I mean by that is, if you look at SPY, right? So if we just go, so hold on, if we go top holdings of S&P 500, right? And then let's just go here real quick. We go view holdings, right? So I want y'all to look at this, right? So these are the top holdings in the S&P 500. Okay? So if the S&P has 500, they got about really like 550 companies, but we're just going to say 500, right? So if the S&P got 500 companies in it, right? But these companies here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, these 10 companies hold the most weight, meaning if these 10 companies right now fall down 50% and the rest of the S&P 500 either stays up or it goes up 50%, guess what, y'all? The SPY still gonna go down. So the S&P 500 is still gonna fall down. Why? Because don't get me wrong, right? ETFs are supposed to be diversified, right? So you are diversifying, but is it really diversifying if these companies hold all the bulk of the weight? Do that make sense? So even if the rest of the companies in S&P 500 that's not here, that y'all don't see here, are staying where they at, but if these companies fall down, then the S&P is going to fall down with it. So I don't know why they do that, but I guess it has to be like that because I guess these are the top best companies that they feel like they want to put in S&P 500, right, in the top holdings. But I don't want that. The reason why I brought that up is because I don't want us doing that with our portfolios, right? To where I don't want us having 30 companies in one portfolio, and then let's just say you put in the bulk in 2 companies, And then 28 of the companies basically are there for no reason. Because, for example, right? So this is how I break it down. If you got 20 companies, let's just say you got a portfolio of $20,000, okay? And you got 20 companies, but you got 5,000. No, you got 5,000 in Apple, 5,000 in Nvidia, but in the rest of the companies, you just put only 1,000 in each. So at that point, bro, it's no reason for you to even have them other 10 companies. Does that make sense? Because you put 5K in Apple, you put 5K in Nvidia, so that's 10, and then you put 1,000 in each of the other 10 companies. So yeah, don't get me wrong, quote unquote, you're diversified, but that doesn't make any sense because those other 10 companies don't even hold as much weight. Because look how much you put into these two companies versus how much you put into those companies. So you probably got, for example, let's just say you got 20 shares of Apple and 20 shares of Nvidia, but you only got 5 shares of this company, 5 shares of this company, 5 shares of this company, and 5 shares. Like, that don't make sense. Do y'all get where I'm coming from? Because those companies are you just wasting money really, because it's like those companies is not going to really move. You only got 5 shares. So that means every dollar it moves is only $5. There's no really point of it being in your portfolio. You have to start another portfolio for it to make sense. Right? And so this is what I do, y'all. When I'm building out my long-term portfolios, when I'm buying shares, I have a max of at least no more than 8 companies per one portfolio. Does that make sense? Because the goal is to load up, and the goal is to really have a nice weight in your companies, especially as a beginner. So if you starting off with 2,000 and then you put 500 here, 500 here, 500 here, 500 here, 500 here, 500 here, instead of 1,000 in Apple and 1,000 in Nvidia, and then just leaving at that and then just building from there, you're spreading yourself too thin. Do that make sense, y'all? As far as diversifying, y'all kind of get where I'm coming from? Now, there's nothing wrong with you getting or buying other stocks. It's just do it in a different portfolio. So what I have is I have different portfolios. I have a portfolio I use for my IRA. I have a risk growth portfolio and a conservative portfolio, right? So, but in each portfolio, I'm not putting in more than 8 stocks because I want to put the load in. Now, if you're dealing with millions of, like for example, right? For example, right, with SPY, the reason why they can do this, the reason why they can have 500 stocks in one damn portfolio is because look how many shares they buying, y'all. Look at that. These people got 180 million, basically 181 million shares of Apple. So that means every time Apple moves $1 to the up or the downside, they're either making or losing $181 million. Because these are shares, y'all. So when you buy one full share, that's how much you're gonna make based off of the dollar move. So every time Nvidia moves $1 to the upside, they're making damn near $295 million per $1 move. Do that make sense? So when you going in and you spread yourself that thin, you're not like SPY. You're not like this. You know what I'm saying? You short yourself because you only making $1 per dollar move. You want to build into that company. You feel me? So I hope y'all kind of understand and get where I'm coming from. Now, when we get to the point where we dealing with millions of dollars, y'all, on our portfolios, then we can kind of we can spread out. We can spread out a little bit more. You feel me? Because we could put 100K in this stock, 100K in this stock. We could put 100K in 10 different stocks, and that's a million portfolio. You feel me? But right now, if we only starting off with 1,000, why the hell are we buying 10 companies? Do y'all feel me? Did somebody just let me know if we good? All right, cool. Cool. All right. So I'll take one more question. If y'all good, just let me know. If y'all, we all on the same page. And then we go ahead and end it there. I'll take one more question. Um, and then we're gonna go ahead and just thug it out. It was a pretty good class tonight. But that's our game plan, y'all. Please, just be patient, y'all. Don't hop into a trade right before Powell speak. He could, if he sneeze wrong, the market going, you know what I'm saying? So just be patient, y'all. Let's see what he finna say. That's for trading. Now, shares, if y'all, you can, that doesn't matter, right? You can buy that whenever. But I'm talking about putting in the option play. Unless you finna, you know, day trade. But even then, you don't want to get into a day trade before he speak. Because if you're not able to take profit by the end, then it's like you just gambling at that point, bro. You feel me? So I see Brandon typing. I'm gonna see what bro talking about. I appreciate everybody who tuned in on IG Live too. I do this every once in a while, just to let people know how we coming, what we got going on. How we move together. You feel me? But I want y'all to pay attention. I'm gonna make a spreadsheet because since March, everything that I closed out green. Go back and look. You can if you want, but I'll once I get the time, I'll make a spreadsheet. But everything I closed out, I at least closed out the bare minimum 5%. Bare minimum 5%. But my main call outs, because I only lost because I did call out like some puts here and there. I had to stop out. But I didn't even lose any, like the percentages that I make, I haven't lost that. You feel what I'm saying? So if I make 10%, I'm not closing out no trade for 10%. So everybody in the group, just go back and look. And then also too, right? I want y'all to do your homework. I'm gonna give everybody some homework. I'm gonna do this too as well. Go look at our long-term stock picks that I dropped and go see where they at. So look at the date and the time when I drop them, and then go in the chart and see where. Damn, I'll give you a prime example. I want y'all to just do this. Go look at Robinhood. I'm gonna give you something just off the top where I know like that motherfucker, since I called it in the group, it went superly crazy. So go look at Robinhood. Go look at Oracle. Oracle just made a new crazy all-time high. Go look at PLTR when I called that out. Go look at bro, it's some crazy stuff in there. So I want y'all to take advantage of the long-term stock picks that I dropped. Not saying that y'all gotta only invest in the stock that I call out. You know what I'm saying? That's what I gave y'all. Y'all got all the sauce that I use to even find and do all this stuff anyway in the course. But I'm just there to help y'all out extra with that. All right. But yeah, I'm gonna make a spreadsheet, man, because my plays be hitting. Even if they take time, I'm going to get on my trade green. He said, going back to my question earlier, I can just look at the biggest trend up or down as well as the time frame. Mental typed that while you was explaining. He said, going back to my question from earlier, I could just look at the biggest trend up or down as well as the time frame. For the supply and demand zones, it's not really that, bro. It's really like you want to make sure you just drawing them from from the peak, whether it's to the up or the downside, from the peak of that drastic move, because that move created the supply, or that move created the demand. Do that make sense? And those, remember, we talked about in the course the limit sale orders and the limit buy orders. How those still sit there. So y'all know when we playing with options or when you buying a stock and you limit sell, right? That's you choosing your price at what you want to buy or you know what you want to sell at or what you want to buy when you do a limit order, right? So that those limit orders is what creates the supply or demand zone. That's the institutional investors picking their price at which they want to buy and sell. Once the price gets to that level or area, then the order is executed, and then that's why you'll see them drastic moves because we just said, look how much these institutional investors are going in with, right? They have 10 million shares of, or 100 million shares of these companies. You feel me? So when they buy or sell, it moves the market. We don't move the market. We're retail investors and retail traders. We can't move the market with nothing we do. You feel me? We going in with the stuff we going in with is chump change to them. You feel me? Like they wouldn't even go in with that position size on a bad day. You feel me? Like that's how it be. But all right, y'all. I think we all good. Just somebody let me know. Just one person. Just let me know if we all good tonight. We got our game plan. All right, cool. All right, I appreciate y'all. Remember, y'all can always hit me up. Y'all want to do one-on-ones. Y'all know y'all get them half off. So, y'all struggling, need any extra help, whatever the case, let me know. And yeah, you can always direct message me. I don't never want y'all to be in the community and feel like y'all suffering or y'all alone or y'all stressed out or, you know what I'm saying? We all in this together. So, don't never hesitate to get up with me. All right. So I appreciate y'all. One love. And yeah, we gonna ball, man. All right. So that was we just finished our live meeting, our Sunday live meeting. We talked about a lot. We went over a lot of stuff, and we're gonna have a decent week. So I appreciate y'all typing in on ID Live, man. If you wanna lock in with me, you know where to find me. Invest your bag. Let's get to it.